Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100 as the market continues to digest the election outcome and soaring COVID-19 cases. And Brian, I'll let you take this away, but really not much new to report since last week. It's kind of snooze fest.
Yeah, the working from home trade has taken a back seat over the last couple of months to the recovery trade. We've seen that especially since the 2 or 3 announcements from the healthcare companies, from Pfizer, regarding the vaccines, positive news. So we've seen a lot of activity in the value space, energy, industrials, financials, materials. They're having an excellent month. It's driven the small cap and mid cap indices to outperform in the last month or two. And now every index year to date is well in the green. Let me share with you going back to the Nasdaq. So the Nasdaq is up about 1% over the last 5 sessions. And as you can see right here, this is a 30-minute period chart. Over the last week, we've been in a pretty narrow range between 11,890 on the support side and above, with resistance at 12,035. So tight, narrow range. If we zoom out a little bit and we look at the daily period, we can see that the index actually made its year-to-date high back in September, and we've now made low highs since then. So some sideways, price action as we worked off those overboard technical readings, given the 84% rebound off the lows. Here's the long-term weekly period chart, and this kind of really tells the story, zooms out, filters out a lot of the noise, and we can see that resistance is up around the 12,050, 12,100 level. The weekly closing high was 12,091. So this is the level that, it will be key for the bulls to overcome, to get back above, and then hopefully resume this strong uptrend. You can see that momentum peaked back in August on the 28th, right when the index peaked. So there's no bearish divergence there. So to me, this looks like healthy sideways consolidation, again, after that strong uptrend. And the daily the weekly RSI is now in the low 60s, still very bullish. So until we see anything of significance that would signal a downward move, right now my bias is still that this index certainly remains constructive. Value very recently has taken the upper hand, but growth on the long-term basis, if we look at, say, the value over growth ratio, which is here, this is a weekly period, you can see still clearly in a multi-year downtrend. And over the last 3 months or so, we've seen some sideways activity here. So this has a potential to be bottoming out, but it's still very early to tell. We still haven't really cleared any significant pivot levels, and we're still well below that 40-week moving average, which is synonymous with the 200-day. And that's why so many technicians like to use this 40-week average. Until this ratio gets it back above there, I still think growth is the more attractive industry or group to be in over the intermediate to longer term. We still could see value, catch up, but right now, growth still seems to have the upper hand.
Yeah, it feels like it's more of a trading environment than a longer term environment. Of course, we have those outliers with vaccination timing and getting it through the population, and of course, final results of the election and so forth. So it feels as if it's more a little bit back and forth versus establishing a really true longer term trend.
Right, exactly. We're seeing that lock and roll where, investors appear to be locking in those gains, at least partial gains, in a lot of these big high growth flying stocks. Many of them are in the technology space, which is why they've are labeled as the working from home trade. And we're seeing that rotation into, the underperforming, the lower value names that investors are likely looking at and saying, maybe they have a longer term time frame where they know we have a couple of tough quarters ahead of us with the lockdowns increasing, but maybe they're looking out 12 to 18 to 24 months and starting to build in those longer term holdings in deep value stocks.
All right, Brian, great stuff. Thanks for joining us on Trade Talks. And quick programming note, we will be off next Thursday for Thanksgiving, so I'll see you in a couple weeks. Thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.